Welcome to our presentation on Mutual Fund Basics Part 2, brought to you by rebelcapitalist.com. So what are we going to cover today in Mutual Fund Basics Part 2? Just two very important topics for mutual funds. We're going to talk about the categories of mutual funds and why index mutual funds are good. Let's go into the categories of mutual funds. The first one we're going to cover is the stock fund. As the name indicates, stock fund invests mainly in common stocks. You have what's called the large cap mutual fund, or CAP stands for capitalization. These are primarily funds that invest in stocks of big companies or blue chip companies. Then you have the mid capitalization. These mutual funds invest in stocks of companies that are smaller than the large cap, but a little bit more riskier than large cap stocks. And then you have the small cap, which invest in emerging companies, and this obviously is the riskiest. Then you have international stock funds that invest in stocks that are traded on foreign exchanges. These are susceptible to currency fluctuations, between, say, the dollar and the euro. And then you have sector funds that invest in a particular sector. It could be utilities, finance, technology, energy, alternative energy sector funds, and they invest in the stocks of those companies that are in that particular sector of emphasis, such as finance, technology, or energy. Now, the next category of mutual funds that we are going to cover is the bond mutual funds. Bond mutual funds invest in the bonds of either corporations, state municipalities, or the U.S. government. The important thing to remember about bond funds is the taxable nature of the income generated by that mutual fund. It is different between the various types of bond funds, and is something that if we're sensitive about the tax nature of a particular fund, we should be aware of this, and we'll cover this in future sessions. The next category is money market funds. Money market funds primarily invest in short-term securities, such as U.S. Treasury bills. You have a taxable money market fund, or it could be a tax-free money market fund. Then you have the next category, balanced funds. Balanced funds invest in certain allocations of stocks, bonds, and money market investments, hence the name balance. The next category is asset allocation funds. These funds invest according to a stated investment strategy, stated in the prospectus. You have aggressive growth. You could have growth in income, or income. So the last category we will cover today are the index mutual funds. Index funds invest primarily in securities that are included in indices such as the S&P 500 or the Wilshire 5000. Indices measure the price movements of groups of stocks or bonds. The S&P 500 is probably the most common that we hear about. You have stock index funds, bond index funds, and specialty index funds. And what happens with a stock, let's use S&P 500 index mutual fund as an example. A money manager will purchase or the portfolio of say an S&P 500 index fund will include the 500 company stocks that make up the S&P 500. There's no active management of that particular index fund. It simply makes up the 500 company stocks that are in the S&P 500. And the same would go with any particular index that that particular mutual fund invests in. I really like index funds, particularly stock index funds like the S&P 500. They are the easiest form of mutual fund investing. They match the market. If you invest in a S&P 500 index fund, whether it's Vanguard or Oppenheimer, most money managers, investment managers have an index fund. It matches the market, and it's very difficult for an investment manager to outperform the market. Most money managers, investment managers, do not outperform the market. And why pay a management fee or an investment advisory fee if they can't beat the market? The costs of an index fund are typically very low because they're not actively managing an index fund. It's considered passive management. That concludes our presentation on Mutual Fund Basics Part 2. Thank you for your attention. Please visit us at rebelcapitalist.com. Have a good day and good luck.